What's going on, my fellow stock market freaks? Your boy Kevin. Welcome back to the channel. I've been on a 2 or 3 week hiatus. My whole family caught the old Ronna, and all over the news are saying that this Omicron variant isn't as severe, and that may be true, but my family must have not caught the Omicron. We must have had the Delta or the original variant, because whatever we had sucked some major ass, some big stanky ass. It was awful. I was down for the count for a week and a half or so. I don't remember a good 3 or 4 day stretch there, just laying in bed, big time fever, night sweats like you wouldn't believe. You wake up and it looks like you pissed the bed. It was terrible. My dad's actually still in the hospital right now. He got it the worst out of all of us, and he's heading in the right direction, improving every day. So it's looking good on that front. The market, that's what we're going to be breaking down. The overall market, some craziness happening. We saw all-time highs last week, but the last 3 or 4 days, we've seen a lot of red. Today, we're seeing some more red. We're down over 1% in the S&P 500. So we're going to be talking about the implications of raising rates and how much power the Fed has over the market right now. We're also going to be talking about some big news regarding Tesla stock. Tesla, a big price target boost from one of the big banks. We're going to be breaking it all down, so you're going to want to stay tuned. First, let's look at the direction of the overall market. Before we buy anything, before we make any trades, we have to account for what is the overall market doing. It is right now red on the day. We're down about 1%, a little more than 1% on the day, and we're approaching a very significant level in the SPYs. Look at this. We hit a bottom here, and then we double bottomed, and then we rocket shipped and made new all-time highs. We're approaching that double bottom again. We know that's a key area of support. How do we know that? Look at the volume. We know this is a key area of support. Number one, we've tested it twice and held it both times. And number two, each time we tested it, we had a spike in volume, telling us that this is a very important area. All right, so right now we're approaching that area. We need to watch it. But the only way, in my opinion, we break through that area is if the Fed keeps talking about raising rates and doing so faster than we initially expected. Initially, we thought that the Fed was going to raise rates 3 times in 2022. Well, Goldman Sachs came out and said that they're now predicting that the Fed will hike rates 4 times in 2022. Why is that important? Everybody's talking about
inflation. Inflation's gonna cause the stock market to crash.
No, it isn't. The exact opposite, to be quite honest. Think about it, right? Milk is more expensive, gas is more expensive, stocks are going to be more expensive. The way stocks go up is by reporting more revenue, by reporting better than expected earnings. And the more money that's available to be made, the more possible revenue that these companies can report. So inflation is not going to cause the stock market to crash. What is going to cause a possible stock market correction is the Fed trying to tamp down inflation. And Joe Biden has a really big inflation problem. People are starting to get pissed off because they're paying more for everyday goods. And he knows this. He knows that inflation is one of his biggest issues to deal with right now. And you know he's going to be leading on old Jerome. He's going to be whispering down old Jerome's ear saying, Jerome, you got to get this inflation under control. We're here on the Real Clear Politics site, and we can see that his approval numbers have been trending in the wrong directions since really election day. It's been trending down, his disapproval numbers trending up, and that has a lot to do with inflation, and his administration knows that, and they're going to be doing everything they can to tamp that down while still providing stimulus, while still providing government subsidies, but keeping those inflation numbers in check. Keeping the inflation numbers in check is what's going to cause a contraction in the stock market. So we need to pay really close attention to what the Fed is going to do. Is there going to be 3 rate hikes in 2022, or is there going to be 4 rate hikes in 2022? I agree with Goldman Sachs, and I think there will be 4, maybe even 5 rate hikes in 2022 because I think this administration knows that in order to survive the 2022 elections, the midterms, they have to 100% get inflation in check before those midterm elections, or it is going to be a bloodbath for Democrats. Job growth. As the market enters full employment, the Fed is going to have more confidence to raise rates. So Goldman, this article goes on to say that the Wall Street firm's chief economist, Jan Hatzius, I may have butchered his name, said on Sunday that he now figures the Fed to enact 4/4 percentage point rate hikes in 2022, representing an even more aggressive path to the central bank's indications of just a month ago. Remember, a month ago, we had that big Fed meeting, and they said that they were expecting 3 rate hikes in 2022. Now it's looking like 4, maybe even 5. We had a horrible jobs report last week. The payroll, the non-farm payroll rose by just 200,000 jobs, while we were expecting 422,000 new jobs to be added. Why is this happening? Because I think if you're wanting to go back to work, if you were laid off, if you were furloughed due to the Rona, and you wanted to get a new job or go back to your original job, you have already done so. There is a demand for workers out there like we have never seen before. Jobs cannot hire people. When's the last time you can remember that companies were wanting to hire people? There was a demand for employees, but these companies were unable to fill those spots. This is due because people don't want to go back to work. There's so many subsidies out there, they don't need to go back to work. That said, I believe we see these employment numbers start to stagnate and the Fed start to realize that this employment situation is going to stay where it is right now and that they are going to have to plow through and just raise rates to try to tamp down this inflation. So what's going to happen to the market if the Fed does indeed raise rates 4 or 5 times in 2022? I'm not predicting a crash. If you have been trying to predict the top in this market, you've got burned over and over again. What I am predicting is some sort of a correction and consolidation, a breather, a relaxation period, a meditation period for the stock market. It needs a breather, folks. It just ran a marathon. It just ran an uphill marathon recovering from the Rona correction. Look at the monthly chart. It looks like a penny stock chart, folks. It looks stupid strong. And we're just now experiencing a monthly correction right now off of those 480 highs on the SPY. What I do think happens over the next 12 to 24 months, we may just see some type of consolidation and determine where this economy is headed. Nobody knows where this economy is headed because we've never seen anything like this before. These are unprecedented times, right? Everybody's saying that. These are unprecedented times, and we don't know what to expect from this economy. Is it going to recover and get back to those pre-Rona numbers that were so good? Or is this just a mirage because of the amount of money that the government has printed? There are arguments on both sides of that debate, and only time will tell. And the market is going to want to take in that data and maybe needs to relax while that data comes in and then determine whether we can justify another move higher or a correction is due. So what I'm going to be doing is just sitting back and looking. There's going to be some really good trades to be had during this time, so I'm not saying sell everything, step out of the way, and keep your ammo dry. That's not what I'm saying. Dip buyers have been getting paid. All I'm saying is we need to be cautious. There are some extremely high valuations out there. Maybe we need to stay away from tech, look for some value plays, that type of situation. All right, let's break down Tesla stock. Tesla stock, some big news coming in from Goldman Sachs. Once again, they hike their Tesla price target for 2022. In fact, they named Tesla as their top 2022 stock pick and set the price target at $1,200. So they raised their price target to $1,200 per share from a previous peg of $1,100, citing robust Q4 deliveries. We all know that Tesla crushed deliveries and they keep beating expectations. He sees a signal for further unit growth this year and next. He also noted the group's vertical integration of hardware and software. That is where I'm most excited about Tesla stock, is the software side of things. Software as a service and selling the hardware. Cars, selling common consumer cars, has never been a very profitable business model. But selling software is a profitable business model. And I think that's the direction that Tesla will head, and we will see the growth coming from. All right, so Tesla is also improving its profitability as it brings production and deliveries to scale, with third quarter margins reaching 30.5%. Those are monster margins, which was an all-time high for the company. Revenues reached $13 billion. Tesla will report its fourth quarter earnings on January the 27th. That's an important date. This is an important quarter for Tesla because we're pretty much through the Rona crisis and people are back at work. So it's going to be interesting to see what type of numbers Tesla does coming out on the other side of the Rona. We also got some news on the Tesla Semi-Truck front. At some point, Tesla is going to have to start putting out the numbers in the growth that we've been expecting to see. At some point, the speculation will stop. There's a day of reckoning for every company. Right now, Tesla's numbers, its revenue numbers, its earnings numbers, doesn't match up with its valuation. Why is that? Because expected future growth. One of the ways that investors like me and you are expecting Tesla to grow is the semi-truck front. And we got news that Tesla has begun installing the type of megacharger required to power their 4-engine semi-truck. So if they start spitting out these semi-trucks late 2022, maybe 2023, then that is good news. We need to see these semi-trucks starting to hit the production line. We also have news that Elon Musk company, the Boring Company, finished a tunnel under Las Vegas. And basically this is a company that builds tunnels under big cities to try to reduce traffic. And it is not a Tesla company. It is a separate entity that Elon Musk is involved with. So why is this important for Tesla stock? Well, under the Las Vegas tunnel, they now have Tesla cars driving back and forth. So we could start seeing this around big cities and implementing some type of Tesla product in these tunnels. It's not a fact yet, but it is just another route to growth that Tesla could use. And if we look at the daily chart, Tesla has been consolidating for a good 2 or 3 months now. We had the massive run up, boom, and then we fell into consolidation. We are still in a massive bull flag. Even though we're off the highs by a considerable amount, it is in a good buy zone, in my opinion, for long-term holders, and even as a swing trade. We hit the bottom of the bull flag. You have defined risk. You can attack it with call options. You can attack it by just buying the underlying stock and look for it to hold the bottom of the bull flag and round back out. Massive upside, lower risk. That's what we're looking for as investors and traders. Let's break down Rivian real quick. A little bit of an I told you so moment here on the channel. Back here, I told you that Rivian was overvalued and we sold off from the 125 area. Right now we're at $80 a share. I know you could be looking at the chart, and even myself looking at this chart, you're like, whoa, it's sold off from 180. Right now we're trading at 80. Is this a good deal? In my opinion, Rivian is still a stay away. I'm staying away from it because I still think it's overvalued based on its competition. You're better off, in my opinion, buying something like Ford or General Motors. You're not going to see massive returns. You're not going to see 100% in a year, but it's a better option, in my opinion. This is a $40 stock right here, Rivian, based on its numbers right now. You're talking about no sales. They're in the process of building a big manufacturing facility right outside of Atlanta, close to where I live. And I just think there's going to be a lot of bleeding before there's any profitability. There's going to be a lot of bleeding before there's even a Rivian car hitting the street for common consumer use. So it is a stay away for me. I'm not touching Rivian until we get to that $40 range. I'm going to be putting out videos, or trying to put out videos, every day this week and every day this month. I've been gone for a few weeks, trying to get back in the swing of things, get back crushing the market. We had an awesome 2021. We killed it in 2021, making over 200% in the Webull account. So hopefully we can replicate things, have a really good 2022 as well, and crush the market once again. I love all of you guys. I'll catch you guys tomorrow. See you on the flip side. Peace.